Hello, Theo Traders. This is Brandon Chapman with you. It's Monday, June 2nd, 2025, and this is the TheoTrade video for today. Folks, gold is providing a warning sign for the market, and we got a similar warning sign not too long ago, about 2 weeks ago, back on May 15th. We're going to walk through this, but you'll see right here, gold kind of surging. We got 20 minutes left to go during the cash session. We're at 311.54. Gold's up 2.6%, but guess what? The S&P's only at 0.4%. And so guess what? We're just kind of in this position where we're back to where we were back on the 15th, almost the exact same price level, but a similar result when gold began to lead out. We saw option trade in gold, GLD specifically, GDX. We saw gold significantly outperform the S&P 500. And that was really the beginning of the end of that big rally that we had going into the highs there. So as we look at the S&P 500 today, with 20 minutes left to go, we're kind of testing this area that was last, again, achieved back on the 15th, similar close, etc. for the S&P 500. Gold's leadership is never really a good thing for the market. Why? Gold doesn't give you anything, right? If you hold gold forever, you're going to maintain your purchasing power, but you got to pay to store it. You got to pay to protect it. All this stuff at the end of the day, gold is a negative yielding asset in real terms. Again, why does gold go up? Because the dollar's losing value. And so over time, gold is a negative yielding asset in real terms. That's something to remember. So when gold's outperforming the S&P 500, something is wrong. Now, what could be wrong? Now, as we look at the periphery, I've had kind of a logic behind gold that I've been kind of sharing for months now, going back to January and the breakout back here. The idea that China does have to potentially support their markets, their currency, their stock market. If we look at FXI, when the S&P was down, FXI was up. FXI is up 1% today. Now, is China potentially selling our debt? Well, let's look at TLT. TLT is down about 1.5% today. We'll look at a couple of trades here in the space on TLT, bearish trades on TLT and other stocks here in ETFs in just a moment. But here's the deal. Treasury's down, gold up. Well, normally gold follows the treasury market, right? Because as prices go up, yields go down. And again, remember, gold is a negative yielding asset over time. Now, you can lease your gold out to try to generate something off it. But the bottom line is gold and treasury prices should be relatively correlated, and they haven't been. Why? Again, we can go back to, is potentially Japan. Are they having to sell our debt? We look at the Japanese yen today. The Japanese yen is strengthening almost 1% against the dollar. That's a pretty dang big move. Normally, you see yen strength like this, you'd expect to see dollar weakness. But that's not exactly what's happening. But again, are those countries that are holding our debt, do they have to sell our debt to raise dollars to potentially protect their currency? Well, guess what? We can look at CNY here, the Chinese yuan against the dollar, basically going nowhere today. And that may be bad data and trading view or whatever. But the point is, I don't see a lot of movement that's been going on in the Chinese yuan against the dollar. Is it possible, like we've seen over recent weeks, that the Chinese may be strengthening their currency by selling dollars and buying yuan? Now, if they're selling treasury bonds to get dollars, is it possible that some of those dollars may be going into gold? Well, if you hear anecdotally from China, they say, oh, there's a lot of demand. Are we back at it again? Selling our debt and buying gold. Well, that basically puts us in a very similar position where the market's been for a while now. So while we're getting close to where we were in January in terms of price, we're also situationally getting in a similar position, right? Where gold is leading the S&P 500. In fact, I like to use a ratio of SPY to GLD. And what you'll see here is I have this line drawn. We've broken out. This is the relative strength ratio of the two. I guess I got to I drew that anyway. But the point is, we've broken out from this, right? We're seeing gold strength today as the line's pointing down. And this is a problem for the S&P 500. And so as we look at them, and we look at the tariff discussion, is China cheating on the agreement for 90 days? Is there going to be more tariffs? Well, guess what? We had more tariffs announced. In fact, if we look at Cleveland Cliffs today, CLF, we're seeing Chinese stocks make a rebound. The steel stocks make a bit of a rebound. CLF's up 23% today. NUE, right? You can go around the periphery of steel-oriented companies. Who's this directed at? It's directed at China. China makes a lot of the world's steel, and we're saying we're gonna tariff it. So look, we're seeing this intervention kind of come in. The agreement, they're not getting momentum. They may be cheating, and all of a sudden we see a breakdown. And when I see that news over the weekend, and I see FXI up today and bonds down, the dollar weakening again against the yen, for example. We're seeing again stocks up mildly, gold up a lot. This tells you something about where things stand in relationship to China specifically and many other nations. In fact, Japan says that discussions aren't really happening or aren't very far along. Again, this really kind of pulls the rug out from any sort of bullish potential here, and it puts us back in a very, very similar position we were back in January into February, or even more recently, May 15th, before we had a little bit of a pullback. Then we had the rollback of European tariffs or the delay in tariffs. This is the exact same position we're in. And again, what we're seeing is that any positive news isn't generating the same returns it has in the past. We're basically becoming desensitized, both positively and maybe negatively. But at least for today, the S&P is up, but gold is outperforming significantly greater. And SLV, as an example, is up almost at 31.57 right now, 5.25%. And again, maybe breaking out a major resistance, maybe two levels of resistance. We're back up close to that same level we were in October 22nd, that critical 30 level that was broken. We've now broken back again, and gold as well. Is this the beginning of a major move again in gold and silver? Very similar we saw back here in January, into February, into March. I kind of hope so. And again, this provides an opportunity to play it. Now, looking at some of the trade that went on today, specifically in the silver market, I'm going to bring up SILJ. Everyone's wondering about when are the miners going to feel the strength. Today, you're seeing junior silver gold miners up 7%. Now, as we look at the trade today, and this was in the 27 June expiration, this is something they're doing ghost prints, 2,000 contracts bought in one trade, way out of the money at 16. Now, here's the deal, though. 16's up here. Can we get there in how many days? In 25 days? Absolutely we can. Is it likely? No. But you can trade spreads, and I like the spread pricing better in SILV than SILJ. But either scenario, you could buy stock in it, look at a $16 target here in the next few weeks, and you've got a baseline of support at around 13. If we look at GDX, GDX is a product, gold stocks breaking resistance, breaking to a new 52-week high. And we look at the trade in here in GDX this morning. It was a 19 SEP expiration out here, for example, buying in GDX. It was the 54 calls right here, 3,000 contracts mostly bought. And again, you'll see a lot of activity in gold today. Even some put trading activity, a lot of selling of options as well. And we look here at the on GDX, probably some rolling going on, some buying in here as well, closing some in the money stuff, rolling down the money. You can see that in time and sales. But again, we're still seeing bullish trade option activity. I call them ghost prints in GDX, in SILJ. Is it possible? We're finally starting to see gold stocks move. It's a possibility. Okay. And if the S&P kind of holds up here a little bit, dollar weakens, we continue to see the strength in gold. This could really propel gold stocks, silver, and silver stocks going forward. And also, you notice there was a breakout today in HG. There was some nice trade last week in ghost prints in FCX, for example, on Friday, getting a nice bounce today in FCX up 4.3%. But again, this is predominantly a story centered on what? Centered on gold specifically and silver. As we look at some of the areas of interest here, FXI, again, what is there? We're up about 1% right now, but in FXI, sorry, I think it was in KWEB, sorry. In KWEB, a Chinese internet ETF, KWEB here, we'll look at the 6th June expiration. Right now today, they're buying out here at the 34 strikes. Okay, again, I mean, this creates the potential if we start to move at to and through 34, it may help propel KWEB, but it's representative of a little bit of a turn in the sentiment. We had some bearish trade last week, some downside, a big downdraft on Friday. Now we're seeing a little bit of bullish trade come into K-Web today. But again, this is a dicey situation because what's going to happen with yuan? The Chinese can't support it forever. They can't support their stocks forever. But right now, we are seeing that they are doing it. FXI is held up relatively better. But again, if we start to see the Chinese yuan sell off vis-a-vis the dollar, it's going to create some major heartburn for these products specifically. So again, we've got option activity in bonds. Well, actually, we didn't look at bonds yet. Let's look at TLT. And again, the option trade is leaning into this kind of thesis of bond selling, Chinese strength, gold and silver buying. And so if we look at TLT today, this was the 15 AUG expiration out here a little ways. We're at here, 15 AUG, 17,000 contracts bought, mostly in one print at the 81 strike. And so again, bearish trade in bonds, bullish trade in China, bullish trade in gold. This sets us back to where we were not just a little over a week ago at this point on the 15th, but bigger picture, can we get a much bigger move in gold and silver and a downdraft in the S&P? This does put us very similarly back to where we were in January as FXI was rallying through January and February. The S&P began selling in February. And if we look at gold to GLD, gold was bid in January into February. Right now in the SPY, I'm looking at a very specific level, which ended up being close to today's low. We have prints of 593.99 and a print of 585.55. These are 1 million plus prints traded in one trade, and we're kind of boxed in at the moment. We break above, we could get more bullish. We break below, we could get more bearish. And if you look here just in the last couple of days, we've been kind of using this level as a base of support. The print came in the other day here. And so again, watch these two levels, 594, 585.5. We start to break one side or the other. It does give you an indication of where the market may be headed in the very near term. But the warning sign right now from gold is be careful. There is a slippery slope for the market, and that slippery slope may be in vis-a-vis higher gold prices as well. Well, that's all I got for today, folks. Catch you on next week's video. You have a great one. Thank you.